tuning in. You're watching BQ Prime. My name is Alex Mathew. If you went to the market recently to purchase ceiling fans, you'll have noticed that there's quite a big change that has occurred in this year. And what that change is the energy rating or a rating scale that has been added to every product that is now mandatory. That is causing quite a big shift in the industry. To talk about that and talk about the implications, not just for the industry, but for his company as well, is Mathew Job, the Chief Executive Officer and the Executive Director of Crompton Greaves Consumer Electricals. Thank you so much, Mathew, for taking the time.
Thank you.
Let's first talk about this big change. And from what I've read, you started this transition to energy rated fans before everybody else. And so in the last quarter of the calendar year itself, you had started selling these energy rated fans. Can you tell us about the transition? And has the transition taken place for your company through the channels already?
Yeah. So I think our objective, even as you mentioned, in the last quarter, which is the October-December quarter, I think when we got into the quarter, we had clearly, made a call that, what we wanted to do was to get these superior star-rated fans to the hands of the consumers as quickly as possible. So obviously, we did not want to build any excess stock in the channel during the October-December quarter, and that I think that stance was very different from what most of our competitors had done. And we felt that since this was a superior product which would benefit the consumer, we felt it was required to get it into the hands of the consumer as early as possible. So we actually started selling out these star-rated fans to the trade towards the end of last quarter. And of course, from 1st of January, you could not sell anyway. You could not sell the non-star-rated fans. But I think the advantage of not having pushed too much stocks into the channel in the last quarter was that already in the month of February, we could see our star-rated fans in the retail shelves already. So, and the second thing is obviously, it's good to have, like I was, talking and telling everybody that these products cost a little bit more, maybe a couple of ₹100 more, but they save almost 850 rupees in electricity bill over a year, which is a 2-month payback period. So I think, typically earlier, if you wanted to buy energy saving fans, which is primarily only 5-star rated fans available, you had to shell out almost 1,500 rupees more. And which is why, in spite of the fact that there was a reason to buy, people were not buying it because of the big delta. And
I do want to talk about the implications, Mathew, about not just from the perspective of the consumer, but for you as well. So let's talk about the implications first for the consumer. One is that they now have an understanding, and correct me if I'm wrong, but this 1 to 5-star rating, 1-star rating implies a 30% saving of energy over a non-star rated fan.
Yes.
And that goes up to over 50% for a 5-star rated fan.
Yeah.
But what are the implications in terms of saving costs? You mentioned one metric, but you've broken it down.
Yeah, so let me explain. If you compare to a non-star rated fan, if you buy a 1-star rated fan today, you have an annual energy saving, electricity saving, a bill saving of 850 rupees. You save 850 rupees per fan per year. If you switch from a non-star rated fan to a 5-star rated fan, the saving will be roughly 1,550 to 1,600 rupees. But of course, to buy an energy saving 1-star rated fan, you only need to pay maybe 200 rupees more or 150 rupees more. To buy a 5-star rated fan, you need to obviously pay 1,000 rupees more. So while it saves more energy, it costs a whole lot more, I think. And that's why we believe that this is a great thing for the consumer, because by only paying a couple of 100 rupees more, you now have energy saving within your reach. Earlier, if you wanted to save any energy and get down an electricity bill, you had to buy a fan which costed you almost double. So that is why, that's when I said that it's great for the consumer, it is because it democratizes energy saving. And that's why we were eager to get it into the hand of the consumer as quickly as possible.
The other implication, Mathew, is for the company and the industry itself, right?
Yeah.
And that is that in this period of change or transition, you will have to watch the pricing of your product quite carefully. You mentioned that with the introduction of these star ratings, there will be an increase in the cost for the consumer, but that is going to be across the industry. You chose to introduce your products early, and as I understand it, you had a bit of a discount on the pricing, at least in the initial days. Does that exist right now?
So I would say, just to clarify, what we did not do was to deep discount the old non-star rated fans. Because we never had an intention of putting too much stocks into the trade, which will actually delay getting these superior products into the hands of the consumer. So we did not have a deep discount for the old products. Okay. Now you're right. I think when the new products, these products, in terms of cost, they actually cost roughly 15% more. Okay. 1.5. However, we chose to only pass 5% because we believe that the consumers have already been hit hard by the commodity-led inflation over the last 18 months. So over the last 18 months, the price of fans has already gone up 20%. Okay. The consumer is already paying 20% more. Although the cost was much more, the cost implication was close to 30% more. We had already passed 20%. So the consumer was in no situation to pay another 15%. So we said we will pass 5% for now, although cost increase was 15%. And our R&D teams will work to get this increase down from 15% over the next 6 months or so to around 5% or even lower if possible. That's why we took the call that eventually, it is possible. Our engineers told us it is possible with some work to get the cost delta down. So we only decided to pass as much to ensure that these new products find good acceptance. Because even by paying 200 rupees more, you get 850 rupees of cost savings. So that's what we are.
I do want to understand how your portfolio sits across that range.
Yeah.
Because you have quite a few offerings in the ceiling fan space.
Yeah. That is correct. I think we have products. I think we are one of the few companies whose products start right from a 1,500 rupees consumer price all the way to 10,000 rupees. So, obviously we have, the kind of price increases we have passed at different price segments is different. But I believe that, the market dynamics will force almost every player to be able to get more efficient. Because, if one player only passes 5%, other person cannot pass 20% or 15%.
Very true.
So I think it will make the whole industry more efficient. It will ensure that the demand remains robust because all these are linked. If your demand is not robust, you cannot do much on the back end to really bring the cost down. So I think it is taking a forward-thinking action to limit the price increase. So demand starts to build in summer as we go along because the last few quarters has not been great for the industry. So we got to get the demand back in the summer quarter, and that will help drive the cost delta down over time.
I think in terms of demand, there will be quite substantial demand considering the conversation about heat wave. But what are we looking at in terms of the current market share for Crompton Greaves in the ceiling fan space?
See, in the ceiling fan space, we currently have market share of roughly 27 to 28%. And this market share has been building over the last 16 quarters. Of course, October, December quarter, I would count it as an aberration because of all the disruptions that were happening. But otherwise, our market share has actually grown every one of the last 16 quarters. And we fundamentally believe that this whole shift to energy saving, energy efficient fans, if anything, will only accelerate the market share gain for Crompton. Now, of course, Go ahead.
What is the contribution to revenues for this business? I'm trying to understand because you have quite a few offerings across appliances and otherwise. So what's the contribution?
So to the company's revenue, the fans business contributes roughly 40% of the company revenue. Yeah.
So what I'm trying to get is that there is a dramatic shift that has taken place. And you said that you've only passed on 5% of the increase in the cost. You are taking a call as of now to either protect or grow your market share at a time of transition. Therefore, could we anticipate at least over this current quarter and in the next quarter, perhaps, till your R&D team does what you have said them to do and fix that cost dynamic, that we could see a little bit of pressure on the margins?
I mean, the pressure on the margins has been there for some time. Okay, it's a combination. Obviously, earlier it was primarily being led only by commodity inflation, and now I think in the near term, both in this quarter and maybe even in the next quarter, we will see a combination of especially on fans, cost increase driven by the fact that the entire design has had to be changed, and second, commodity inflation actually has come back in the last few weeks. Again, to start to so if I look at copper and steel and so on and so forth, costs are going up again. Okay, almost 8 to 10% in the last 2 months. In the past, if you see, we have, in spite of the fact that cost increased 30% and price increased only 20%, we managed in such a way that we did not see a 10 percentage point contraction in margin. So we managed in terms of driving the right mix, cutting costs elsewhere. So while I firmly believe that margins will be under pressure, I think, I don't believe it is wise to try and protect margins, percentage margins on a quarter basis, because that will actually mean that we have to sacrifice share. And we have learned it the hard way, for example, in pumps, where we decided not to take a pricing action in the short term and eventually started losing share. Now, with the hindsight of, with the benefit of that learning behind us, I would think that, will my structural margins on fan remain intact on a year basis? I think definitely yes. So I see no reason to disrupt, our trajectory by being too, protective of a percentage margin. I would rather continue to try and grow business and get the demand back.
What's the target for market share?
See, obviously we have to grow market share on a going basis. Today I'm at 28%. I would think that in the next couple of years, 2-3 years, we must get that to at least 1/3 of the market. That would be a good, strong position to have. In the last 6 years, we have grown from 23 to 28. So maybe in the next 3-4 years, I should be able to build that kind of share gain again. That is our ambition going forward. Yeah.
Mr. Job, just a thought based on this shift to energy saving, and the star rating draws a lot of attention to that aspect of energy saving. And one would think that a customer would spend a little time to understand the implications of that. For you as a company, then, do you anticipate that people will uptrade? And do you see the shift in the contribution from the higher yielding or the higher margin fans, the more expensive fans for you?
Yeah, I think, today with the new star labeling program, I think it's going to give structure to the entire portfolio much more than what it was in the past. So you will see from now you cannot sell non-star rated fans anymore.
Sure.
At least on the ceiling fan side. So, maybe the difference between a 1-star and a 2-star would be maybe $100-150. You pay $150 more, you go to the next one. But it's not only star rating, it's going to be a combination of star rating, or energy efficiency, aesthetics of the fan, silence. There are a whole lot of levers which will be available. And I think the whole portfolio, at least for Crompton, would start looking in a more structured fashion. And I do believe, and just to give you some numbers, a few years ago, our premium fans were only 7% of our fans portfolio. Today, it's up to 25%.
Sure.
And we believe that this will actually accelerate this entire, premiumization of fans. Because, I think it will make a logical transition for somebody, to get into the fans market at the entry level 1-star. But you pay $100 more, you can get to a more, better looking 2-star fan, and so on and so forth. So I think, yeah.
My last question relates to R&D and spend. Obviously, in an industry which is as competitive as yours is, there is going to be a lot of focus on continued improvement. Will you have to spend quite a bit on developing technology that will keep you ahead of the curve?
Oh, yes. I think, a couple of years ago, maybe 3 years ago, we decided that innovation has got to be one of the fundamental sources of competitive advantage for us. So over the last 3 years, we have built up an entire central R&D structure to really, support because as I mentioned, first you need to have a good idea. But second, you need to be able to translate that idea into a product which actually delivers on that idea. And I think this entire R&D structure which we have put up in a 50,000 square feet facility in Mumbai, in Vikhroli, I think that center gives us enormous possibilities to convert an idea into a product. So I think, but that's
what
not one
cost implications, Mr.
So
Job?
I would say, it's primarily employee cost. And then it's the cost of laboratory and so on and so forth. Laboratory and kind of costs are basically capex. It is not, and ours is not a high capex business. But I would say the cost of the R&D organization, would be 50 to 60 crores a year at the moment.
Okay.
But for a company of our size, I think it is absolutely something which we actually need to invest more and not less.
Fair enough. It's been a pleasure speaking with you, and thank you so much for sharing your time with us.
Thank you. Bye.